Today's May 11th. It's Tuesday. Just got back from vacation last week, so I'm trying to get back in the swing of things here and shoot a new video for you. In today's video, though, I wanted to talk about the crypto market, give you an update as to what's going on here, and then I wanna move over into the London Hardfork on Ethereum because that is coming up here soon. And if you're wondering what the London Hardfork is, we'll dive into that and I'll talk about that. Then I want to also switch over and talk about Mastercard, and they've got 6 startups that they're piloting projects with for an accelerator program. So we'll go into that too, and then I also want to finish up with the U.S. digital dollar, okay, and what they're doing there from the Federal Reserve, because they've got 5 different pilot projects that they're working on for the U.S. digital dollar. So, getting into today's video, I want to talk about the technical analysis on Ethereum, because Ethereum, guys, has been skyrocketing. We are back over $4,000. Yesterday, we had a slight dip in the markets, and apparently, according to the rumors and from what I was seeing in traditional markets, the S&P 500 took a dip last night after close, and that's what they're saying brought down the crypto market as well. But as of today, we've recovered, and if we look at Ethereum here, guys, we had an ascending channel, okay, starting way back here in January, and we broke through that ascending channel on May 3rd. And that is extremely bullish for Ethereum. Even if, let's say, we pull back from here and we take a slight retracement. Let me just pull it up here, because normally with Ethereum you get retracements of about 25-30%. So if we came back down and we retraced, we would basically be using that upward ascending channel now as support. Okay, and that could bring us back down to about 32.50. That's if we came down from here. But with the way prices are moving right now on Ethereum, and with this new London hard fork that will be pushed out now that the Berlin hard fork is live, I think you're going to see that Ethereum continues heading higher. I know a lot of the expert analysts have Ethereum being priced in somewhere around the tunes of $8,000 to $10,000, and that would be sometime like late June, probably midsummer, July timeframe. So that's extremely bullish, and I'm looking forward to Ethereum heading higher in prices here. Even if we do take a slight pullback, like I said, we're using this upward channel here as support now. So yeah, it's exciting because again, when Ethereum goes up in prices, the rest of the altcoin market heads up too. And as you can see over here on the right, the entire market right now is in green. Okay, I know there are a few coins that are making pretty good moves right now. Like you got Polygon up 8.27%. Dogecoin's kind of recovering from this Saturday when Elon Musk got out there and started talking about Dogecoin being a hustle. So it's starting to recover. And if you guys don't know my thoughts on Dogecoin, you can click on the video up here somewhere where I talked last week about my thoughts on Dogecoin and some other stuff when it comes to some of these old timers like Warren Buffett and Charlie Munger bad-mouthing blockchain and Bitcoin as a whole. So check that video out. Let's go over here to the news though. This is the Berlin hard fork that I was telling you about, which included all these EIP protocols. Okay, now you had the EIP 2565, 2718, 2929, and 2930, which are included in the Berlin hard fork. Now, I'm not going to go over these because that would probably just take way too long, and I don't want to bore you with that. But let's skip down to here, because the Berlin hard fork is live right now, and then the next stop is the London hard fork. They're saying the Berlin will be followed by London in July. So we've got the London hard fork, which will be implemented in July, and this is expected to incorporate the EIP 1559, which is a proposal that would reduce the supply of Ether. So you've heard me in previous videos talk about how Ether would become a deflationary asset, and this is part of that. Um, Specifically because they start burning Ether, which is the native currency in Ethereum. And even though there's an unlimited supply of Ether and Ethereum, um, it would make it deflationary because the amount distributed of Ether uh, for an entire year would actually decrease because it's being burnt in the background. So, I honestly I think that's extremely bullish for the price of Ethereum. We'll have to see what happens as far as transaction fees because initially, when the Berlin hard fork rolled out, transaction fees on Ethereum were going down. Now, since then, I've seen some stuff out there on YouTube and others talking about how transaction fees are still rather high. So that might be because the London hard fork has not been implemented yet. Okay, which is for that proposal on the EIP 1559. We'll just have to wait and see and see what happens there because Ethereum, guys, it's the coin that created the altcoin market as a whole. So it still is the number 2 crypto in dominance for market cap, but it does have a lot of competition. Okay, especially with tokens like Cardano, for instance. So uh, we'll just have to wait and see because I mean I can't predict the future. I don't have a crystal ball here, and I can't tell you if Ethereum, is for sure guaranteed that the transaction costs are going to go down over time. It's just something we'll have to wait and see what happens. But from the price perspective, Ethereum is just taken off, and that's what I like to see because I seriously believe we've entered the altcoin season. Moving forward, though, let's go over here to Mastercard because I was talking about Mastercard, right? They had Mastercard adds 6 startups to Accelerator, including blockchain payments provider. The fintech innovators will receive direct support from Mastercard as they bring their products and services to market. And I'm not going to go over the entire article here, guys. If you want to read any of this information that I'm showing you, I'll leave the links in the description below. So you can just click on the link in the description below and go over the articles in more detail for yourselves. But basically, MasterCard Start Path, which is an accelerator program for fintech startups, has welcomed 6 new companies innovating in the fields of software as a service, transactions, and blockchain-based payments. And this is Mastercard, okay? Visa's doing something similar. And again, from the fundamental perspectives, like I always try to follow because that's what moves prices, that's extremely bullish. And I believe you're going to see prices over the next few months head higher because of this stuff. Their MasterCard here is saying they're making a big push into blockchain technology with its latest Start Path participants, reflecting a renewed commitment to innovating in the payments arena. As Cointelegraph recently reported, MasterCard was one of several major companies to lead a $65 million raise for Consensus. So Consensus, I don't know much about what they're talking about here as far as Consensus, if it's a company, but Consensus, the word consensus means trust when it comes to blockchain terminology. It's algorithms. So I'm guessing that's probably what they deal with if it's a company there called Consensus. One of the most important, prominent software companies in the blockchain. Okay, so it's a software company, and if their name's Consensus, my guess is they probably deal with consensus algorithms and trust on blockchain, which is essential to what you're trying to do here with credit cards and financial transactions. You need something that's going to implement trust so that people will actually use it. And so that's really big, $65 million that they raised there. Their credit card company has also incorporated carbon footprint tracking into its blockchain-based provenance solution, which allows users to make more environmentally conscious decisions when shopping for everyday items. So that's what MasterCard's up to right now. The other one I want to talk about is the Digital Dollar Project to launch 5 U.S. central bank digital currency pilots. And yeah, that's huge, okay, because that's coming from the Federal Reserve Board. Washington here, this is Reuters. The U.S. nonprofit Digital Dollar Project said on Monday it will launch 5 pilot programs over the next 12 months to test the potential uses of a U.S. central bank digital currency. The first efforts of its kind in the United States. The private sector pilots initially will be funded by Accenture, I believe that's PLC, and involve financial firms, retailers, and NGOs, among others. The aim is to generate data that could help U.S. policymakers develop a digital dollar. So we've been talking about this for a while now. U.S. digital dollar. It's no surprise that's what they're trying to do, because if you look at how much money we've been printing up ever since back in March of 2020, when we went into the lockdowns because of the virus, it's just astronomical. Now here we are, in May of 2021, and they're pushing out a $1.9 trillion stimulus package. I don't know if you guys heard this, but the mayor of Miami actually, as soon as he found out that the stimulus was passed through the House, okay, for $1.9 trillion, he went and bought himself Bitcoin and Ethereum to hedge against inflation from all the money printing, because you just can't print a currency into oblivion like this with no consequences on the back end longer term. So, and again, with those fundamentals in place as well, from the U.S. digital dollar, or I'm sorry, the U.S. dollar, with fundamentals in place with the U.S. dollar and traditional markets and all the money printing, it creates a much more bullish environment for cryptos as a whole and Bitcoin. Now they keep talking about Bitcoin too in the news recently, talking about how it doesn't serve any type of use case, and that's from a monetary perspective. Now from a store of value perspective, because it hedges against inflation, you only have a limited supply of 21 million Bitcoin out there that'll ever be produced. It offers a great hedge. Okay, so from a store of value perspective, I think Bitcoin, you know, longer term over the next 5 years, you might see it at $200,000 or $250,000 very easily. So that's pretty much the news I wanted to cover for today. Again, if you haven't subscribed to the channel, go ahead and subscribe to the channel. Hit the like button if you like the content that you're seeing, because I continually try to update you with fundamentals in the market, so you can kind of see where we're going from a macro level moving forward with blockchain, and how that's going to impact everything that we're doing in our daily lives. So the more you know about that, you know, the more willing you will be able to walk on your own, okay, and be a lion, like what I always talk about. Separate yourself from the sheep. All right. Let me know what your guys' thoughts are on blockchain, where you think we're going, because I'll be shooting another video here soon, and I also want to give you some updates on Theta and T-Fuel in the next video. So with that said, you guys have a good day, and as usual, fear nothing, my friends.